Hey everyone, welcome back to the channel. If you're following Opendoor Technologies Open, you're probably wondering what's been going on in the last 24 hours and what could be coming next. We've seen some interesting shifts recently, and today we're diving deep into what that means for the stock. Stay tuned because this video could change your perspective on this stock. Let's get started. Before we jump in, just a quick disclaimer. This video is not financial advice. Please do your own research and consult with a financial advisor before making any investment decisions. Now, let's talk about what happened with Opendoor in the last 24 hours. Opendoor's stock has been under pressure lately. As of today, it's sitting around $7.52, down by nearly 5% in the last 24 hours. It's been a rough patch, with shares taking a hit despite no major news breaking the market. But that's not the full story. In the last day, there was some interesting insider activity. The interim CFO of Opendoor, Christina Schwartz, sold approximately 73,951 shares of the company. Now, this wasn't an unusual insider sell for personal reasons. She was selling to cover her tax obligations related to restricted stock units. But the timing of this can raise some eyebrows. When insiders, especially high-ranking executives, sell shares, it often raises questions about the company's outlook. On top of that, Opendoor made a big move issuing special KZ warrants to shareholders. These warrants give investors certain rights and were issued with a record date set for November 18, 2025. While this might sound like a good thing on the surface, it's important to note that warrants can be a double-edged sword. They can dilute stock value and, in some cases, signal that the company might be struggling to raise capital or wants to incentivize investors with additional options. When you look at all this together, insider selling, the issuance of new warrants, and the stock price decline, the sentiment around Opendoor in the last 24 hours is cautious, to say the least. The market's reaction is understandable. After all, investors want clarity, and right now, there's some uncertainty. But the question is, what comes next? Where is Opendoor heading from here? Let's first talk about the positive side. Despite the recent struggles, Opendoor still has a lot of potential. The real estate market, as we know, is cyclical. If mortgage rates start to drop or if there's a shift in demand, Opendoor could see a bounce. After all, the company's business model is built around a thriving real estate market, and if conditions improve, so could its prospects. Moreover, Opendoor is a tech-driven company with an innovative approach to real estate transactions. If the housing market stabilizes and Opendoor can leverage its technology to streamline operations even further, there could be a strong rebound in the stock. But let's not get ahead of ourselves. The risks are still significant. The housing market is unpredictable and interest rates are still high. Opendoor's profitability is still under pressure, and without a significant uptick in home sales, it might struggle to hit its targets. So while the upside potential exists, the downside risk is also very real. In the short term, we might see the stock continue to struggle or even dip further if investor sentiment doesn't shift. However, in the medium to long term, the stock could recover if housing conditions improve and Opendoor's strategy plays out as expected. But again, this isn't a guarantee. So, what should you do if you're thinking of buying into Opendoor right now? First off, if you're holding, make sure you're comfortable with the risks. Don't let short-term volatility scare you if you believe in the long-term potential. If you're thinking of buying in, take a careful look at your entry points. Right now, $7.50 is the key support level to watch. If the price drops below that, there could be more downside ahead. However, if the stock finds support and starts to consolidate, it could be a buying opportunity. But again, monitor the housing market and the broader economy for clues. Now, if you're a short-term trader, you'll want to be cautious. The price swings in Opendoor have been quite erratic, so any trade should come with tight stop losses and a solid plan. Pay attention to volume and sentiment in the market, especially from retail traders who tend to have a big impact on stocks like Opendoor. You'll also want to keep an eye on the latest news regarding the company's warrants and insider activity. In conclusion, Opendoor is facing a critical moment. The stock has potential, but it's going to take some patience and a keen eye on the market. There's no guarantee that the stock will turn around immediately, but with the right conditions, it could recover. Be smart, stay informed, and always remember that the market can be unpredictable. That's it for today's update. If you found this video helpful, please give it a thumbs up and subscribe for more updates like this. Let me know in the comments, do you think Opendoor is a buy or a wait-and-see stock? I'd love to hear your thoughts. Thanks for watching, and I'll see you in the next one.